It's 2 a.m. My phone lights up, trading alert, ETH, 3 confirmations, stack aligned perfectly, RSI divergence, volume spike, AI signal firing green. I'd been waiting 3 days for this setup. I went in, full size, no plan, no levels mapped out, no stop, no targets, just emotion. $47,000 gone in 11 minutes. Not because the alert was wrong, because my execution was. What's up? You're watching Alert Edge Daily, and if you watched video 03, you already know how I run my 3 confirmation decision framework, how I filter alerts, how I separate noise from signal. If you haven't watched it, links in the description. Go now, come back. This video won't make sense without it, but here's what video 03 didn't cover. The moment after the alert fires. That's where most traders bleed out. They get the right alert, they see the setup, they even know the direction, and then they fumble the execution so badly the trade becomes a loss or a fraction of what it should have been. Today, we fix that. This is the complete playbook I use to turn every qualified alert into a structured, systematized trade. 7 rules. Real numbers, no theory. This is what actually prints money. Let's move. Before I enter any trade, crypto alert, stock alert, doesn't matter. I run one calculation every single time. I risk 1% of my total account per trade. Maximum. That's the rule. It doesn't flex. It doesn't bend for high conviction setups. It doesn't bend because I feel lucky. 1%. Here's the formula. Position size equals account balance times risk percent divided by distance to stop loss. Let me make this concrete. Say my account is $100,000. 1% risk equals $1,000. My AI alert fires on Bitcoin. Entry at $68,400. My stop loss is at $67,200. That's a $1,200 distance. So, $1,000 divided by $1,200 equals 0.833 BTC. That's my position, not a dollar more. On a $25,000 account, same math, risk $250 per trade. This is what risk management actually looks like. Not gut feel, I'll just use a round number. Exact math. Every time, the traders who blow up accounts are the ones who skip this step. They think position sizing is for beginners. It's not. It's for survivors. A stop loss placed wrong is just a delayed liquidation. I use a 2-layer system, technical and volatility based. Layer 1, technical. My stop goes below the nearest significant structure, key support. Previous swing low. The level the market has already proven it respects. Not round numbers, not arbitrary percentages. Structure. Layer 2, volatility. I cross-check against the ATR. Average true range. I never place a stop tighter than 1 ATR from entry. If the market breathes 400 points on a normal day, a 150-point stop is just noise. It gets hunted every time. So my stop is always below structure and at least 1 ATR away, whichever is further. That's the stop. And once I set it, I don't move it wider, ever. Moving a stop wider isn't giving the trade room. It's redefining your risk after the fact. That's how $1,000 losses become $4,000 losses. Set it, leave it, let the market decide. Once a trade moves in my favor, the game changes. My rule is simple. When the trade hits 1 R profit, meaning it moves the same distance in my favor as my initial risk, I move the stop to break even. Done. I am now in a free trade. The market can do whatever it wants. I'm not losing money on this position, period. From there, I trail my stop using one of 2 methods. Method 1, structure-based trailing. As new support levels form, I move my stop beneath each one. I let the structure tell me where the stop belongs. Method 2, A TR trailing, I use a 2 times ATR trailing stop. Disciplined, automatic, removes emotion from the equation entirely. Why does this matter? Because the biggest mistake I see in trade management is locking in profits too early on winners, or letting small winners turn into losers. Moving to break even at 1R solves the second problem. Trailing stops solve the first. The market rewards patience, but only if you've already eliminated the downside. Amateur traders sell everything at once, or they hold everything and give it all back. I do neither. Here's my exact profit-taking system. Tier 1, 50% of the position exits at 2R. So if I risked $1,000, I take half off when I'm up $2,000. That's $1,000 locked in. I've already covered my risk entirely. The rest of the position is playing with house money. Tier 2, 30% exits at 4R. That's another $4,000 on 30% of the original position. Booked, gone in the account. Tier 3, the remaining 20% runs with a trailing stop. This is my lottery ticket. If Bitcoin runs from $68,400 to $75,000, this slice catches that entire extension. 3 tiers, 2 locked profits, 1 runner. This is how 6-figure profits are built from individual alerts. Not by holding everything and hoping, by systematically banking gains while keeping a position alive for the outlier move. Stop leaving your runners on the table. Trading psychology isn't soft, it's the hardest part of this entire game. So I have rules, written down, non-negotiable. Rule 1, no revenge trading. If I take a stop out, the trade is over. I close the chart, I go for a walk. I do not immediately re-enter because the market owes me. The market owes me nothing. Rule 2, 1 loss does not change the system. A single red trade doesn't mean the alert system is broken. Doesn't mean I change my position sizing. 1 loss is data, nothing more. Rule 3, I do not hold losers past my stop. The moment I start having a conversation with a losing position, rationalizing, hoping, adjusting the stop, I've already lost. The stop is the stop, honor it. Rule 4, 2 losing trades in 1 day, I'm done, flat. No more trading that day. Protecting capital is the only job when the edge disappears. Discipline and execution is what separates traders who last from traders who blow up and disappear. Let me walk you through a real execution from a recent alert last month at NVIDIA. Stock alert. The AI alert fired at 4:12 a.m. pre-market. 3 confirmations locked in. RSI, bullish divergence on the 4-hour chart, above average volume accumulation, and the AI signal confirming directional bias. Long. Entry, $887.50. Account at $150,000. Risk 1% equals $1,500. Stop below the prior day's swing low at $876.20. Distance equals $11.30. Position size, $1,500 divided by $11.30 equals 132 shares. Entry $887.50. Stop $876.20. Risk equals $1,500 exactly. First target at $898.80. 50% off. 66 shares exit. Locked in $746. Second target at $910.10. 30% off. 40 shares exit. Locked in another $1,000. Remaining 26 shares, trailing stop activated. NVIDIA ran to $934 over the next 6 trading days. Runner caught a $46.50 move on 26 shares, another $1,209. Total profit, $2,955 on $1,500 risk, nearly 2 times captured. Run the system 40 times in a quarter with a 55% win rate. That's 6-figure territory. This is what alert execution looks like when the playbook runs clean. Every single trade goes into my tracker, same day, no exceptions. 7 columns: date, alert source, entry price, stop loss, target hit, R multiple achieved, and execution notes. That last column is the most important, not the P and L. The notes. Did I honor the stop? Did I exit at my tier targets or deviate? Why? This is where real improvement happens. Comment execute below and I'll drop the free Notion and Excel tracker directly in the comments. 3 mistakes that cost traders everything. 1. Sizing based on conviction, not math. Fix. Run the 1% formula before every entry. Always. 2. Moving stops wider after entry. Fix. Set it based on structure and ATR, then lock it. It doesn't move wider, period. 3. Holding winners too long or panicking out too early. Fix. Tiered exits. 50-30-20. Systematic. Emotionless. 3 mistakes, 3 fixes, 1 playbook. Risk 1% per trade. Place your stop at structure with ATR validation. Move to break even at 1R. Take 50% at 2R, 30% at 4R. Let the runner ride. Execute the rules. Review the trades. Compound the edge. If this video gave you an edge, subscribe right now, hit the bell. Every video in this series builds on the last, and video 5 is the one that ties it all together. The AI alert scoring system, how I rank every setup from 1 to 10 before I risk $1. You do not want to miss that drop. Alert Edge Daily. Now go execute.